Hello and welcome to Mortgage Watch for April 25th, 2008. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego, and we're bringing you real estate, mortgage, and financial news that you can use. The LIBOR rate may be adjusting quite a bit upward. What is the LIBOR rate, you ask? Good question. The LIBOR rate is a rate that's used in London, and it's an overnight rate that banks charge each other for money. Many adjustable rate mortgages are based on the LIBOR rate, so it's critically important to what's going on in our mortgage market. It actually stands for the London Interbank Offered Rate. Well, it turns out an investigation by the British Banking Association that a lot of banks have been misrepresenting what they're actually paying to borrow money. Out of fear that it would send a bad signal that they're paying too much to borrow, they've been kind of lying or misrepresenting about the rate that they're paying to borrow money, so that the LIBOR rate may be artificially low. For those whose mortgages are based on the LIBOR rate, that's probably not good news, because the LIBOR rate looks like it's going to go upwards in the near future. As my wife said, maybe they should change the term LIBOR rate to liar rate. In our less is more segment, several banks reported lower losses and write-downs than expected. So Wall Street was very cheered this past week, and some bank stocks like Citibank actually went up. Well, that's really good news, but unfortunately there's probably more bad news to come. Bank of America is announcing greater losses with HELOCs, and AmBank, which is a credit insurance company, has posted a $1.7 billion loss, actually 1.66. There are more losses out there, unfortunately. It was estimated this past week that the losses could total $900 billion altogether. So far, $200 billion has been disclosed, so there could be a lot more pain to come. But the good news is that there's over $850 billion in uninvested funds at various hedge and mutual funds looking for a home. So as we've been saying, there will be losses and there will be winners in what's going on. The landscape is shifting, and that there's hidden losses and weaknesses that are being exposed, but actually new strong players ready to step in. It's a lot like an earthquake. When an earthquake happens, the weak structures are damaged and they're exposed and there are losses. But we learn a lot from an earthquake, and there's new codes that are put into place to prevent future losses. Through this entire tragedy, one firm's loss will be another one's gain. One family's foreclosure is going to be another's buying opportunity. And as the Paul Simon song says, one man's ceiling is another man's floor. So things will be changing and they will be resolving themselves. Along those lines, it's become apparent that foreclosures are going up everywhere. And as I said, there is more pain to come in the near term. More and more people in America are waking up to the fact that there is a pretty severe economic recession. Obviously, the price of gasoline keeps going up, and a lot of other factors are in play also. Congress is finally getting around to passing the FHA modernization bill, which we've been saying for several months is going to be a strong ticket to help turn things around. The bill's been modified, and the attempt is to make it help as many people in various stages of payment stress as possible. It'll be several months before that bill can really be implemented. As we said in previous weeks, these are giant locomotives. This is a giant train that needs to get going, and it takes a very, very long time. For those who think the federal government just takes way too long, I don't know if you've had a chance to see the John Adams series that's been on HBO on Sunday nights. Very, very interesting. If you have a chance to see it, they now are playing all of them like kind of back to back, and they're available. Very, very instructive. It's about the early days of our country, the Revolutionary War, and the era thereafter. If you think things take a long time now, it should have been back then. It took them 7 years to get a federal government together. It took them like 4 years to elect the president of the United States, George Washington. So when things seem slow now, I'll tell you what, back then they were really slow. So things are going to happen, but it takes a long time to implement the programs, get everyone on board for what's happening. But once it starts, it's going to provide relief for a lot of people, and I believe form the underpinnings for a turnaround in our economy. The good news is, on the brighter side, that more homes are becoming more affordable. So many people who were standing on the sidelines for years, 3, 4, 5 years, are actually starting to buy homes. These are qualified buyers. Now, there are a lot of people still waiting, but the question is, why wait? I know you're thinking prices are going to go down further, but it's like waiting in the summer for the best day of the summer to go to the beach or the river or the lake. You won't know what the best day was until summer's over. So standing around and waiting to buy a house until you think the bottom has been reached, you may not know when the bottom has been reached, and you'll find yourself on the upside again. This is a very, very good time to buy. And the good news is there are stirrings of activity. And as I said, qualified buyers are coming out and buying homes that 3 or 4 years ago they just couldn't afford, as housing prices roll back to where they were 2005, 2004, etc. I don't think they're going to stay like this forever. There's a lot of factors in play that once we turn the corner on this thing and these homes are absorbed, that the market's going to solidify, and probably over the next 6 to 12 months, we're going to see things find stability and then go upwards from there. A reminder to everyone who is a homeowner, you can easily get your home's tax assessment corrected. I know there are a lot of scam letters going out there right now to homeowners in San Diego, in California, in Colorado, and throughout the nation. And they're telling you that they can help you get your tax assessment lowered for $100 or sometimes $250 or $300. You really don't need to pay that money. If you're a homeowner and you're in an area where you know that prices have come down, which is most of the United States, some areas have not, you can easily contact your county assessor, and for free you can get your home's value reassessed and the price, that is the tax assessment, lowered. That'll probably save you several $100s. Of course, it's temporary. When prices start going up, they'll increase that, but for now you can take advantage of that, and that's a reminder to everyone to lower their tax bill for free. If you're in financial distress or foreclosure right now, our hearts go out to you, because the pain is continuing to grow and there's more and more homes. I was up in Riverside County yesterday where there are so many homes in foreclosure and the drops have been so significant. So our hearts go out to you if you're in the middle of that process. If you're someone who's living within your means, whatever that is, our support goes out to you, because that's an important thing. If you're prepared to weather a temporary financial storm, our admiration goes out to you, because it's very, very important. Whatever you can do to set aside some funds, whatever that is, it's very, very important to be prepared for a temporary financial storm. These tough times are going to pass, and we'll be on to brighter days. In the meantime, keep a positive outlook on what's going out for you, and things will turn around in the near future. Thanks very much, and we look forward to seeing you next week on Mortgage Watch.